What's going on? What's going on? What's going on? Hopefully all is well, Dennis. Miss you inside the community, brother. But I know we've had private talks. So hopefully all is well with yourself and family. Mm-hmm. Mm-hmm. Y'all know we got to set the vibe before we start. I watched a bunch of lives before, and it's always cool to not only give the information, but make people feel like it's an enjoyable thing to watch. Some entertainment, some good vibes, some good energy. I don't just come here to give you information. I don't come here to preach at you, but I do come here to hopefully bring a little bit of positivity to your week and your Sunday. So yeah. So if you're re-listening, re-watching, I want to get to it. If you've never seen me before on lives and this is your first time here, welcome. We tend to touch on the stock market, of course, but it's our weekly stock market analysis. So this is the time where we come together every single week at 7 p.m. Eastern Standard Time. Now that you've gained an hour in the morning, you should be well rested to get the information for the evening. It's probably dark where you are. Here on the West Coast, you still see some light out of my side window here. So yeah, it's beautiful time. I know it's getting dark for a lot of folks. So hey, you got no excuse at this time. You're inside, you're getting cozy. Okay, might as well learn how to trade and invest and learn these crazy candles and stock market analysis. All right, so I like to give roughly about a 5 to 10 minute buffer. So we're a little bit slightly behind at the 10 minute after the hour mark. So I will speed it up today and just allow people to kind of flow on through. Let YouTube push it out to the masses. We're almost at that 2,000 subscribers. It's been a crazy journey. I appreciate the support, and crazy in a good way, meaning that daily showing up, that daily 1% that you may have in you that you have left. You just keep showing up and showing up and showing up, and God will bestow on you the blessings that you earn, not deserve. That you earn, not deserve. All right. So I see some folks coming in. Welcome. Let me know where you're tuning in from. What side of the country, what side of the world. And if you're rewatching, I know a lot of folks rewatch. Thank you so much. You can speed ahead where you see me change screens here. We got a lot to discuss, so I'll go ahead and start giving some little playbook of this evening. And we're starting a new month. All right, so welcome to November. It is typically, and the question today is the bullish continuation trend that we have been on since really the past 3-4 years, but really since April of 2025 when we had that tariff dip. It has been on an absolute tear. So can this November continue? And it looks like it will be continuing. All right, so I'll give up my sentiment of that potential weekly pullback that we might have, kind of a little bit of shakiness to start off November. But once we found that settling bottom, we should have a continuation run. The reason being is because we have a trade deal that is coming to a close with President Trump and President Xi over in China. So that trade deal is kind of coming to a close. It seems like it's good sentiments. All right. We'll have some remarks from President Trump over the next week or so around the tariff news and seeing where that may land, as well as we have not even had our semiconductor earnings yet. All right. So we still got NVIDIA, AVGO or Broadcom. We've got AMD this week. We've got Palantir coming up. We've got Hood that's been now a major player in the S&P 500. So we got a lot of earnings that you thought last week's tech earnings was good, right? Of course, we had the Meta drop and the Microsoft drop, but overall the earnings were fairly good, right? Blowing it out of the water for Apple and Amazon. So we're starting off this earnings season, right? And really just this year of earnings that's just been absolutely amazing, right? And the question becomes eventually, does this continuous AI spending for the market happen and we enter into this bubble, right? And that's the question at hand is when is the bear market year going to come. All right. And we'll talk all about that as people are gravitating in. So thank you again for that introduction, for, listening to me there. And we'll get right to it here. All right. So give me a like, a subscribe, comment down below where you're tuning in from, and let's jump into it. What I want to do, and they'll let me know if you'd like to see a little bit of live trading today. I don't like to I think last time the live trading kind of overshadowed, in my opinion. There was just a lot going on, overshadowing the market analysis. So what I want to do potentially, and y'all let me know how y'all would like it, is if we go ahead and knock out the market analysis, I could set up another live stream for a potential evening live trading session potentially for the futures market. So let me know if you'd like to see that. I could set up a whole new live for that, and we can go from there. All right. So without further ado, let's jump into it, share the screen, and let's get in and out of here, because this darkness that is looming upon us earlier with this time change is going to get some of y'all sleepy. So I got to keep you awake. All right. So let's jump into it here. All right. All right, got to get the quote unquote, as they say, the bills out of the way. Okay, the bills out of the way. So if you'd like to join Leverage University, I'm just going to go ahead and mention it really quick here. Let me see if it'll pop up. There we go. So Leverage University is our Discord platform. It has pretty much become our financial platform. All right. I am also a life coach as well. I do private coaching. Right, I take on very specific clients, whether it be through trading or they want to discuss other pieces of their life. And does not mean, getting too deep for some of you, like, dang, I don't want to tell this random dude my life, but I've been doing it for almost 8 years now. So if you'd like to join Leverage University strictly for the trading piece, if you'd like a little bit more one-on-one touch support with trading or business or anything that you're like, hey, I think this guy can help me out with, you can book a call there. So we've got our analyst level right here, which is our main level. That is a monthly fee that you come in, live trade, get your specific trade ideas. We do long-term, we have short-term, we have beginners, we have large accounts, all those types of things. So that is the main first product level there. All right. So that's all I'm going to mention there. Get that out of the way. So I'd love to have you inside eventually, whenever your time is. If you've left us and you like to return and you're like, man, I feel left out, I need a community, right? You can always take a break, come back. We'd love to have you, but we're not stopping. All right. And you know that even there's a short little window for those that know, right? We eventually get right back on the horse, and you're like, man, I wish I would have known about that. All right. So I can't share everything on my socials. I can't share everything on these YouTube streets. It happens on a daily basis inside of Leverage University. All right. So love to have you there. Another thing that we got coming on is, this is my birthday month. All right. Birthday month is also one of my favorite seasons of the year, when the time changes, right? When the leaves are falling where you are, when it gets a little bit more brisk in the air, you got your hoodie season on, it's coffee season, it's the holidays and Thanksgiving and good food and the holidays, Christmas trees coming up. So I like to offer a little more value during this time. So what we've got going is I will begin to offer some things towards the end of the year, just to get people started for the new year. So this year, what I'm going to be doing, and let me know if you'd like this down below, is a 2-day live event. I've done boot camps and live event. This is virtual. Okay. Virtual. Our live event here in Vegas will be coming at some point, sometime, or if I'm another location, some point, sometime. All right. So I want to build your trust, earn your trust, and then continue to give value. So our 2-day Finding Your Edge virtual event is going to, and I probably should change that to virtual event, but it will be a 2-day masterclass over options and also futures trading. So if you're a beginner, or you've been watching this channel, or you've got a friend or a family member or somebody that you'd like to say, hey, like, there's finally somewhere you can just sit down and learn for 90 minutes each session, right? And it's going to be less than a coffee. Okay. Less than a coffee. So that gives you any indication it is for anyone and everyone, and it's specifically more so for beginners. So if you've ever wanted to learn how to trade, right, and you're wondering all these things, but maybe you're just a little bit hesitant around joining Leverage University because you don't want to feel lost just yet, this is the event for you. All right. So here is what we will be talking about in the event as well. Whoops. There we go. There we go. So watch live as we break down real market setups, place trades, and teach you how to trade both options and futures with clarity, confidence, and structure. Day 1, options mastery, market overview, psychological check-in. We'll have fundamentals, refreshers. We'll talk about contract selection. what are Greeks, what are setups, what are all these things? Like, Brian, I've watched every YouTube video that you've had, and like I'm trying to understand all of it pieced together. We'll have a live market walkthrough as well, SPY, QQQ, and some of the top things, maybe as a beginner that you'd maybe want to look to trade and maybe how to trade them, right? Maybe some demo trades, we'll have that in there. And then we'll talk about essentially how to stay centered during market volatility at the time of this recording and this live session here on YouTube, right? The market is very, very volatile. So as everyone is telling the beginners, or maybe even yourself, even myself, right? How do you trade when the news is going up and down and up and down and up and down? Like, this is why I don't trade, Dr. B, right? I just long-term invest, and that's not, in my opinion, that's a cop-out, right? That's a cop-out. Just because things are a little bit different, a little bit tough, right? This is what builds that skill set so you have it for a lifetime. So don't run from this volatility. Don't run because it seems scary or fearful because Trump, every day you're looking and someone, tells you don't do it, right? Understand that there's money in both ways with trading, right? With investing long-term, which is what everyone does and should be doing, you're only looking for upside. So if you can learn both directions and the tools that you need to do that, you have it for a lifetime anywhere, through a recession, through a government shutdown, through a loss of a job, through potential loss of family members, through a potential hard season of your life. You need a little bit of money, a phone, an internet connection, and you can do it from anywhere. Really, the person doesn't even have to have a roof over their head, right? They have a phone and go to a local Starbucks and trade, okay? Futures, day 2. Okay, this is a new potential thing for some people. Is I hear about these futures things, and I want to kind of talk about that a little bit on day 2. So let me know down below if you like this, and I'll give instructions toward in this video and in the middle of it of where you can go to get essentially interested in it. Hey, Brian, put me on the list or whatever you need to do. Just put me there, and it'll be less than a coffee to enter this. All right, cool. All right, there we go. That is out of the way. So let's jump into it today, which is going to be the calendar for the week. Okay, the calendar for the week. For those of you that watch me more frequently, you're really like geared in, because some of you message me and you're like, Brian, like I don't recognize this Forex Factory thing. What are you talking about? The reason I'm using this today is because this is giving me the updated data reports that will be coming out if they're paused, if they're delayed, whatever it might be. So sometimes the other one that I use, the economic calendar on Market Watch, sometimes doesn't give the actual if it's going to be reporting or not. So if you can see right here, this week we've got some data that will finally be coming out, some jobs data that we've been waiting on. So as this bullish structure has been going higher, guess what? We haven't had really any data that has come out and derailed the bullish trend. Okay. So what I tell clients or Leverage University members is anytime there's massive data coming in, okay, typically for jobs, more specifically, we've got ADP numbers this week that should be reporting on the right here. Okay. Non-farm payrolls that typically reports on Fridays. That non-farm payroll report, I think, was supposed to come in 2 Fridays ago. All right. So because that was delayed, the market just said, okay, cool, that's delayed. We don't have that interruption. Let's just keep going higher. All right. So because that is not delayed this time, it's going to be coming out on a Wednesday, November 5th. We should expect potentially some pullbacks that we've been wanting in the short term. I'm talking about for maybe Monday, Tuesday, just slightly in the S&P 500 and the NASDAQ leading into that data, maybe some choppy action as well leading into that data. So I just want you to be aware that if you trade futures with the NASDAQ futures, S&P futures, if you trade SPY, QQQ more specifically, just be mindful of why is it so choppy, or why am I not getting the volume and the movement that I typically get? Because we have that big data report on Wednesday, the 5th, before market open. Okay, everybody good with that? Okay, so you can see the red calendar here means the impact of how important that is. We also have ISM as well, PMI reports on that Wednesday. So Wednesday is going to be a pretty big day as far as data. And then also we've got earnings, which we'll talk about in a second. We'll pull up that chart, what the earnings report looks like. Okay. Looks like we have an unemployment rate that will be coming in as well. Let me see if I can change the currency to just no. Okay, that's fine. Let's see if any other data reports. So it looks like the main thing, we may have some PCE data that's, as you can see, tentative. So anytime there's a tentative report there, we don't know if it's going to be truly coming out right there. So that is why I'm using this today. More specifically, is just trying to get up to date when these reports are actually going to be, printed. Okay. So we got some FOMC speakers on Thursday. So they'll already be giving some remarks on the rate cuts that we just had, the 25 basis point rate cuts, and see what that looks like going forward. Because if you remember, or if you don't remember, the FOMC, let's pull it up here. Okay. If you don't follow me on Twitter, this is pretty much where I post a bunch of financial stuff now at this point, trading stuff. It's kind of my news feed. Okay. So if you don't follow me on Twitter or X, you're more than welcome to. I do give some free trade ideas every now and then, setups on futures, as you can see. So it is my handle there, Dr. McElderry, and you're more than welcome to follow there. All right. So let's pull up Fed Powell's remarks here from the Fed and their recent decision on the 25 basis points. Okay, the Federal Open Market Committee delivered its quarter basis points, while Governor Stephen Moran delivered a widely anticipated no vote because he preferred a half-point reduction. Kansas City Fed wanted to have no cut, speaking for what is apparently growing group of inflation hawks who are worried about the Fed's easing bias. So in all this fancy talk, because this is a beginner-friendly channel, this simply means that there's indecision with the Federal Reserve. So you have Fed Powell coming out saying, hey, everyone, there's a consensus. We're going to do your rate cut that you wanted, blah, 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 right? And it's kind of just like, hey, you already knew, just give it to you, okay? But if we read between the lines, there was some indecision, right? You see there that there was a governor that spoke of a no vote because he was like, we need a higher rate cut. We need a half a point reduction. And then there was a Kansas City that said, I think we need to pause. We need to see what's going on with all this data that hasn't reported yet. And y'all want to cut again. So anytime that there's indecision, the market does not necessarily like that. So I know there's a lot of traders and investors out there that only look at the charts. I want anyone that watches myself even for me, I'm still learning, always a learner, always a student, is that the stock market will teach you about big money, right? And where big money is rotating money and how they play games to drive the market one way or the other. It will also give you an economic sentiment of what's coming, right? So all these speculations around, well, are we in a recession, or are we not in a recession, or is it going to be like 2008? Is it going to be like a dot-com bubble? Like, what is this that's going on? So what I want people to learn is, and I'm continuously learning, like I said, is what is actually happening in the economy. So many people still know that even though stocks are rising higher and assets are increasing in value for people who own assets, the average American, more specifically, is not able to catch up with the wage to inflation ratio. It is just so drastic of a difference from the housing market to the jobs that people have, to the people that can't get jobs, to people that don't want to leave their jobs because they're unhappy or whatever. They have to stay there, but they can't take care of a household as need be. $100,000 doesn't go as far as living paycheck to paycheck, whatever it is. So the consumer, right, is still sitting here like this is not the economy that I can quote unquote thrive in. But every time I see a news article, assets to all-time highs, buying at these extreme values, all these types of things. So what's happening, it's creating this sentiment of, as we know, the wealth separation. Okay. But that should not deter anyone that is looking to get involved, because there's always a bull market everywhere. There's always a rotation. There's always a way to invest, and you don't need $25,000 to trade. Okay. You don't need $25,000 to get started investing in the stock market. You buy partial shares. You can get fractional shares, right? A 20% increase in a year is a 20% on anything. So if you have $2,000 sitting around somewhere and you get 20% on your money throughout the year, what, right? I don't care if it's just $200. It is an extra $200. So you're fighting that inflation to wage ratio via investing, right? So there's really no other tool. We can always try to make more money, but as we know, the dollar is decreasing in value. So we have to find, as the consumer, as a citizen, to increase that on our own terms, right? So all this is saying in summary is that, yeah, the Fed cut, yeah, but I'm not worried about what the government's doing. I'm worried about me, okay? All I'm trying to do is conceptualize this, and now on this YouTube channel, translate it out into a simplistic terms to where people can be empowered to invest in some form or fashion or trade, right? So let me know down below with a 5. That is my, anytime I see a 5s, you're in there with me. You understand, we're good to go. So there's the Fed. You can read up on that on your own. All right. Let's jump into the earnings for the week. Okay. So here's our Discord. I always post the earnings calendar, and we've got this is the earnings week that I actually enjoy. Okay. Because two reasons why. Number one is we got post-earnings setups from our tech stocks. If you don't know how to trade earnings, or you don't know what earnings are, please go watch my earnings video on the channel. I'm not going to go over it here, but you want to trade or invest, more so trade. You want to trade the actual stocks that you're interested in post-earnings, right? That is the best way. And there's a whole slew, which is why you need to join the live event, of why that is. Yes, you can make a lot of money trading before, right? If you get it in the right direction, like Amazon, if you had calls, great, you made your money. But also you can make a lot of money the second day on Amazon, pretty much the same amount potentially, right? So you have Palantir, you have HIMS, you have Navitas, okay, which is a great setup right now in my opinion. HIMS, right, also decent setup. Palantir at all-time highs at 200, right? It's got about a 17% implied volatility, or expected move, I should say, expected move. So 17% up or 17% down. It typically moves about $20 on its earnings move. So if Palantir is sitting right now at roughly 200, you should expect roughly about a 220 to 225 pop, or a 180 to 175 drop. All right. So that is the expected move, roughly about 17%. You can go back and look at all the other earnings. So either way, it doesn't matter if you try to guess it one way or the other. The post earnings trade is going to be beautiful, right? The post earnings trade is going to be beautiful, and it's at the beginning of the week. So I do enjoy anything that has a earnings kind of at the beginning of the week, because it gives me more freedom to trade those weekly contracts at the beginning of that Tuesday on specifically Palantir that I'll be watching for trading purposes. All right. Uber, one of the main watches there, just because they had the partnership with NVIDIA recently. So actually, I'm hoping and praying potentially that Uber may drop on earnings, right? And you know, we'll see. It's kind of got a iffy. I posted in the chat here inside of Leverage University. We use some of the AI technology to give us our readings on the earnings, one way or the other. So Uber's kind of a split. It's been kind of dropping on earnings post, but it's had good earnings. So we'll stay away from that until post earnings. But Uber should be a long-term investment, along with Lyft that just became profitable. So if you don't have Lyft in your long-term portfolio around $18, $19, $20, right, then that is a buy zone for Lyft. All right. So Uber, main watch there. And then I know a lot of folks are going to be eyeing this AMD, right? The advanced money destroyer is no longer an advanced money destroyer. It is absolutely on a tear, right? Running up into earnings. Okay. So that is going to be very interesting. That I do not think they will have an earnings miss. I think it may be one of those kind of situations like Google, Amazon recently, and maybe even Apple recently. If you notice, Apple popped on earnings, great earnings, but it was maybe already priced in and then pulled back. Okay, so that's kind of what I'm expecting potentially on AMD. SMCI also there. I know a lot of folks will be asking about Beyond Meat. Just in my opinion, just stay away, right? There was a setup for a short squeeze that we saw at around 50 cents to $1 that went to $8. Crazy move. But please, just this type of stuff, just stay away from it unless you are one of those people that like to gamble. All right, that's cool. Or you have a strategic setup on it. All right. Novo, also an interesting setup. McDonald's, always a good trader post earnings. Ionic, Robinhood, going to be a main one there. Okay. Main one there on Wednesday. So trading Robinhood on Thursday morning. Okay. QBTS. Okay. The quantum stocks are starting to come out. So we got a lot of semiconductors and quantum stocks. So for those of you that are long-term investors, or those of you that are new and trying to, figure your way, and you've been hearing a lot about all this quantum computing, I'll make a separate video around rare earth metals, all those stocks that I believe could have a short-term value, but you want to be very careful about these stocks that don't have any revenue to them. Okay. So again, a lot of these pump stocks, very similar to COVID. If you remember, a lot of those energy stocks that pumped crazy because they were expecting Biden to kind of go on this whole energy wave and we're going to make millions. They pumped and dumped. Okay, so please be careful on some of these rare earth metal stocks, holding them long term, right? Get your money, assess, keep your stop losses on, and go from there. Okay, Open Door, another one that's sitting around $7 in the real estate space, could be interesting. TTD dropped on last earnings. That's also a really good risk to reward setup, but got to see it post earnings. SoundHound underneath $10. That was good. It's almost to 20 plus now. DraftKings should be interesting. So there's a lot on this that's not the sexy stuff, right? But they are sneakily good. Okay. Qualcomm, main watch. Okay. So I don't know, I'm just going to have to, do some due diligence on Monday and Tuesday. More specifically, I've been studying all weekend, but there's a lot of them that are in some really deep potential buy zones, even Figma here. Okay. Figma underneath $50, right? Dropped on earnings. So that one should not dropped on, excuse me. I'm sorry. Figma popped on its IPO and then dropped back underneath $50. So Figma, go do your due diligence on there, but that one is also very interesting. Okay. So a lot here to watch trading wise. I'll sum up: Palantir, Uber, AMD, Robinhood. Those are going to be the main ones I'm watching for trading, day trading. We live trade inside of Leverage University. So for any of my members, those are the ones I'm going to be trading or looking at for setups. Okay. All right. Let's jump into our next order of business, which is going to be, let's look at, I want you to be also aware of this trade deal. Okay. With China. Okay. China to ease chip export ban in new trade deal. This was 7 hours ago. So just wanted you to be aware, like I said at the beginning of the video, if you're coming in late, right, that we have a couple of positive catalysts that could be coming for the month of November. All right. The month of November is typically more bullish in nature historically. So if we have a bullish month plus a trade deal plus semiconductor earnings plus post tech earnings setups, right, going into a potential Santa Claus rally, right? These are all things that could spur the market higher. Crypto also is on a slight dip. So a lot of the altcoins, right, even our main stable coins such as Solana, Ethereum, Bitcoin more specifically, those are all kind of sitting right at a support zone for the run up towards the end of the year. So please be mindful that if we see any dips, we can trade the downside in the short term, maybe if we see some opportunity. But if we find a lot of upside setups, we could be looking at call options more specifically, or buys for your long term into the end of the year. Okay, cool. All right. One last thing on the fundamentals that I'll show you just to give you an idea on the month of November. Okay. The best 6 months of the year are here. Various S&P index 6-month returns. So we've got November to April. Okay. Very important, which is why I keep boastering and blasting on my social media, more specifically on my Instagram, for people to show up on Sundays. Because if you know these things, you can position yourself to outperform your savings account. You can position yourself to pay for some of those expensive holiday gifts that you need for your friends, your family, the holiday parties, the money you're going to be spending at the end of the year, which most people do. Now, most people, if you already have assets, you're like, Brian, I've already made my returns for the year. It doesn't matter if I make them in these last 2 months or not. I've done well in my portfolios. I'm good to go. That's cool. But there's a lot of folks that haven't ever bought a stock. There's a lot of folks out there that have a good, decent job and they got an extra $1,000, an extra $500. And they're like, what do I do with this? Right? Yeah, you can save it, but it's really not doing anything. So you're risking, no matter what, not doing anything and losing value versus potentially making more on your money and making value towards the end of the year. All right. And learning a new skill set for 2026. There's a lot of uncertainty, uncertainty for the next, in my opinion, 4 years. All right. Going into 2030. Okay. So 6-month period here, we've got a 7% change, percent higher, 76%. So 76% of the times it's going to be a higher month, or you're going to increase your value there. Average percent change, we got a 7%. October to March, 6%. So this is the highest time frame for investors to get their returns. Okay. You look at that October period and you say, what can I position myself at the end of October to go into the new year? And if you remember this year, where did the tariff drop happen? April. So people wrote it from October, right? Election last year, October through the election, through the end of the year, we had a little dip. Cool. We had the tariffs. And then they wrote it into taking profits into April. Once we saw a turnaround with the tariff announcements, a lot of volatility, Trump coming in. And then they wrote it in for another 6 months from May until now. All right. So look at this, take a picture, follow me on X or Twitter, and go from there. Here we go. November. S&P 500 index average monthly returns. Look at this comparative. Okay. The past 10 years. Okay. What have we had? Roughly a 5% return in November. This is from 1950 to 2024. Post-election year, typically a decent return there of roughly around 2%. Okay. Past 10 years, past 20 years. There we go. So November is one of the highest return, if not the highest return month of the year. And people a lot of times are distracted, right? Holidays are around the corner. It gets darker earlier. I'm about to just relax, start planning my trips for the end of the year, and money is just being printed. Okay. So I want everyone that's on here. I know there's a lot of new people that come on to my lives or rewatching. This should excite you, because if you have contacts like this, you can prepare for the entirety of the year, right? You can prepare for the down times, right? Look at February, typically down, right? Look at August, look at September, typically down. So you can be like, man, okay, let me invest or see if there's any dips in February, maybe March, and then ride into the summer, enjoy the summer. Take some profits. Okay, cool. Let me see if there's a dip in August, September on anything that I'm looking at. Okay, it could be just the general S&P 500, and then ride it into the end of the year, take profits again, rotate. Right? I don't know why the school system, or we know why they don't teach this stuff, or why they don't make it that simple, but it has happened in the past 20 years. And this is all the way back to 1950. All right. So hopefully that visual gives you a little bit of confidence. Let's look at one more before we go on the charts. More clues. November and December could be strong. Okay. Last 2 months of the year, 1950. Let's go into 2024. We had roughly a 3% return. We had a 3% return. And then 19, we had a 6% return. So that's beating most savings accounts. Now, savings accounts are roughly up at almost 4%, 3.5%, 4%, but just the S&P 500 is up, just buying and holding, or dollar cost averaging and going higher. So if you can see there, last 2 months of the year, you're making something. Okay. Even if someone just started right now. Okay. So there's 1986. We knew that if you know your historical context, the mid 80s was a rough period for the markets in general. Okay, so mid 80s right there, when we had some banking closures, a little bit of financial crisis there. So there we go. Let me check the chat, make sure everybody's good. Maybe some new folks came up in it. I'm ready for those $10 and $15 stocks. Yep. Cool. Everybody's here. What's going on? Cool. All right, just checking the chat. All right. Let's jump into the charts here. And as always, get your charts up, ready to go. I will give those $10 to $15 stocks because a lot of people are trying to get a double up on those $10 to $15 stocks. Go from 10 to 20 and get 100% on your shares or maybe options as well. All right. SPY. Okay. SPY. Let's jump into it and get my analysis here. And now we got to jump on a monthly because we're in a new month. Okay. So tomorrow the month will open up. And what you want to do on a monthly chart is typically go into the top of the month and then the close of the month. Okay. So that's what I like to mark as my initial resistance that I want to kind of see in the first week of the month. Okay. So in a new month, again, you can look at this and, we're overextended. Yes. But, we were overextended here and we maybe had a little bit of rough month there in December. But if you can see that bullish November right there, if you can see this bullish November of 2024 right here. Okay. And even in a bear market year, I believe that was somewhat of a bullish month. Yeah, right here. Okay. So got to find where the dip is and we'll go from there. All right. So I want to mark that. I also want to mark the previous month high. So this September high as well, because that is going to be roughly our range that will keep us in this bullish structure. Okay. So we've got all the way down to 667, which, as we go into the weekly, we'll see that that is potentially a possibility, but most likely we got to get through some other levels for that to happen. All right. So let's go into the weekly and you'll see these levels start connecting here. So I'll move it up just a little bit to 667. And there's some other levels that we need to mark. We need to mark this weekly high previously from 677. And then also I want to mark this 671. Okay. Okay. So what I want to do is I want to go here, September month close. Okay. I'm gonna just mark that September monthly close. And I want to see this week right here. So when I'm day trading, I typically keep on a weekly. I just analyze the month just to see a potential direction and that we're still bullish and that there's no red kind of coming in just yet. Weekly, we can kind of see a little bit of a different candle here on the weekly. Our weekly, if we look at it, let's look at it from a MACD perspective. No cross on the MACD. If you want to learn these technical indicators, I have videos on the channel. But essentially, as long as this yellow line is above this signal, it's going to have bullishness for the week. As you can see, it crosses there and continues up. And on the chart, you can also see that it is continuing in the upward direction, okay, from that cross. All right. So no cross to the downside. So no really signal of a hefty pullback just yet. Let's look on the daily chart. And what we can see here is that it's curling over just slightly, but no cross, no big downward push on the market. It's still curling up on the daily. So as long as that stays above, right, we could just bounce and continue to go higher. So for those that have been wondering, or for those that have been watching me for a minute, you know that I like gap fills, or I like gaps in the stock to be filled and to trade it back to the downside, or I get interested in going back to the upside. So if you see these light gray areas here, these are gaps. And if you watch my video on that Senku trading pattern, the first gap got filled right here. Okay. We popped higher, could not go any higher, created a lower high on the daily, and we continued lower. Okay. So what's happening right now is that we are not aggressively dropping, right? So why am I telling myself that and also you that? Is because if we're not aggressively dropping, you can see buyers even stepped up there just a little bit. If we're not aggressively dropping like this, that means buyers are still grabbing up every little dip. So if we're trading back to the downside or we're looking for that big drop to fill these gaps, we probably most likely need a catalyst, right? What did I tell everybody, right? If you've been taking notes or watching, what did I tell everybody that was potentially coming on Wednesday? ADP employment job numbers. So if one of these earnings, maybe AMD or Palantir or these job numbers aren't very good or they don't have a good sentiment, right? Then that could be the catalyst that gives us that fill and that first big pullback that we want. Okay. So in your mind, just understand that if you're not comfortable trading the downside, be mindful that we could have a little bit of a pullback, which will be good. And then, Brian, you said that November was potentially going to be green. What's happening? November's just getting started. Okay. So that is the possibility of what traders and investors are looking for is a retest of this zone right here, which would be roughly in 670 to 667. Okay. All right. 670 to 667. Now, if you want to be a little bit more granular, it will be 673. Okay. 673 on SPY. So if you are a beginner or learning or paper trading, or if you're in another community or you do it on your own, you really want to get interested in this pullback to 673 and maybe even dipping a little bit lower and then reclaiming. Okay. So the lower 670s is where we want to see that kind of pullback maybe this week for the overall market. Everybody good? Okay. So what does that mean, Brian? That means that any upside trades I want to be cautious of. So if you're extremely bullish on, man, Apple had huge earnings, I'm going to take Apple calls right away. I told Trent on Friday that if you take calls, and Trent's in our Leverage University community, so shout out to Trent. If you're taking calls, like he was interested in Microsoft calls, okay? All I said to do, if you're going to enter call options immediately for the month of November, that's cool. Just put time on it, right? So I said, Trent, like if you're interested in that, just understand we can have a little bit of a pullback, but I don't want to stop you from getting in. Just put time. That just means do a December in the short term or a January 2026 Microsoft call, things of that nature, right? Because if you enter calls immediately and then we pull down a little bit more, you're like, dang, I entered too early. But if you're expecting that, then you have time on your side. We good? Cool. All right. So there is SPY. We still have a couple of gaps. However, what is the level that we could hold? We could potentially hold this 677. All right. That 677 is that daily high that we closed, and we could hold there. And if we reclaim, that still could go higher just a little bit. All right. So we want to be prepared for these lower levels of these daily moves right here, which is 677. But ultimately, I would be a lot more interested if we do that. All right. Bigger pullback. Go ahead and fill these gaps and have us rotate back up. Okay. My target for potentially the end of November and into the end of the year is really 700 on SPY. That's where bulls are trying to finish off the year strong so they can say, hey, SPY hit 700 for the first time ever, right? So 700 is this close, and I believe they're most likely going to try to take that out, hit it, and then we squeeze into the end of the year, and maybe we go to like 710 and some change, right? Something like that. Okay. So there are your consensus levels and ideas. I'll be live trading this week. So if you're in Leverage University, we'll have a game plan for each day. All right. Now, if I see an opportunity to the downside, y'all know I will take it. Okay. If I see a breakdown or an opportunity to the downside, we can catch a little scalp down. I'll take it. Right. But otherwise, I do not want to get trapped like this, right? Downside, downside, hold, and do something like that. Okay. So anytime I see a grind down, just want to be a little bit more cautious. All right. Let's go into Qs. Okay. Qs have a little bit more potential downside, as a lot of the big tech earnings have reported, and they potentially might have some profit taking to run it back up. So the Apple's pulling back just a little bit. Amazon has a little bit more to pull back to. Nvidia even has a pullback underneath 200 to 195. I'll talk about those in a little bit. Okay. So simply put, you want to watch of those break of the lows, 625.50. Okay, 625.50, and the gap starts at 623 on QQQ. Okay, so this area right here could be an area that we chop and sit and potentially sit. Doesn't want to fill the gap and could go higher right there. Or it could be one of those ADP numbers, something comes in and we just go like this, start filling that gap to the downside. Okay, so just want to share this zone right here is technically still a bullish zone at 623 to 625. All right. So you can see right there where there's a little bit of buyers that stepped right in before that gap fill, 624. You can see how he pulled down there, did not, and went all the way back up. All right. So what I like to do on these is I like to keep this lower high trend right there and start marking the previous day resistance levels that we rejected. Okay, and see if it may want to try to retest that level and stay underneath it. Okay, so right now, if you can see there, we've got this zone, if you can see on Friday, which we pulled down under, came back up, rejected. Okay, I even see a little bit here, right there, that 630 level, a nice psych level of 630. That could never reclaim. So it just sits underneath 630, and then we come down like that. And that will start creating that lower high pullback and rollover rotation. Okay. If you're a person that just looks at previous day high, previous day low, you can definitely just look at these lows. If it breaks previous day low, you can take it down to that low. If it breaks that low, that's probably where we're going to start seeing some flush. Okay. So the charts tells us the story. We'll look at the previous day lows, previous day highs, and pivot points there. All right. IWM. Now, IWM has been getting a little bit of a heaviness. What I've been reading in the price action, heaviness just simply means that they did not like that the December rate cuts were uncertain. Small cap companies need rate cuts, right? They're borrowing a lot of money. They need to borrow money at the cheapest value. So IWM, you can see that on the rate cut day right here, it popped and then faded immediately and then never really recovered. So IWM, in my opinion, right, if we don't have any good sentiment, right, and it breaks below these continuous lows underneath 242, there is a little gap down here underneath 240. Okay, so IWM is kind of in this channel. As long as it's above this 240 level, it's just consolidating up here, kind of in this box, right? So if I draw that box right there, it's just in that consolidation box, right? Sitting up here, 240, and trending higher still. So I don't want you to get twisted for my bulls out there that this isn't higher lows, higher highs, higher lows, higher highs, bullish, but I'm a day trader as well, right? So if I'm looking at the short-term value of this, we have shifted trend over the last week, right? So I've been pop, fade, puts, pop, fade, puts, pop, fade, puts, right? Because it's not giving that rotation or change of trend just yet with a big, strong push, right? So don't get it twisted, which is why I think, it's important to understand how to trade both sides. Or if you're one directional, like I'm only bullish, Brian, then you have to be patient for those deeper pullbacks, because you will get chopped up in this pop, fade, pop, fade, pop, fade, holding calls through this downtrend until it gets to a support level where buyers are sitting, right? So if you're one-sided, you're a bull, you only trade call options, you only like leap call options, right? You've got to really be patient for your pullback levels. All right, we good? Let's look at SMH. Okay, SMH. This is the semiconductor ETF. This gives you, if you don't know, if you're a semiconductor bull, which most people should be, the NVIDIAs, the AMDs, anything with chips, SMCI. This is a semiconductor ETF that you should keep on watch because it acts like your SPY. Okay, if you trade NVIDIA, whatever. This is why, on Friday, right, we caught NVIDIA for roughly 60%. It went to 200% for puts. Brian, how'd you know, NVIDIA is so strong? How do you fade NVIDIA? How do you trade against the strength of NVIDIA? I don't get that, because I'm watching the semiconductor ETF, and because it needs to pull back and it's got gaps and it's overextended, then I'm going to trade that in that direction, right? Until it gets down to a support level. If SMH is back down here at 350 or fills this gap, and I'll look where NVIDIA is, I'm like, ooh, NVIDIA has also pulled back into 190, 195. All right, bet they're aligned, right? Back up, leading into earnings. Because NVIDIA's earnings is coming up. So if you get a pullback on NVIDIA before earnings, that is your dip buy opportunity leading into earnings. If it gets a pullback back into 195, maybe a tick all the way down to 190, and then you go back higher, right? So there's my semiconductor folks for SMH. Let's keep rolling. Let's go through our top tech stocks, and I'll go right into the smaller cap, some of those rare earth metals, things like that, and anything that is underneath maybe $20 or any buy opportunities there. All right. So Apple, okay, for my Apple folks, watching really 265, right? Watching 270 psych level, but really this 265 retest right here. See if it holds that 265. Let's turn on our daily moving averages right there. I like that the daily 20 is further down. So maybe 260 would be a bigger retest, would kind of align with that SPY and QQQ pullback. So that daily 20 moving average, right? If it can get a little bit closer to there and meet it roughly around 260 or so, right? As it rotates up, that would probably be a little bit better on Apple. Pulling back, as you can see, it's already kind of fading here, and that's right in alignment of that 260 level. All right. So watch Apple if you're an Apple trader, pulling back to that 260 level. Okay. Google. All right. Google still needs another pullback as well. Maybe 270 could be that first stop for Google. Maybe if it, aligns, but, in my opinion, Google, I like trading Google personally, and I missed this pop and fade right here. I missed it both days, and now it's kind of back at this, earnings pop. So probably will leave Google alone until it gives me a little bit better either pullback or another pop, and I can fade it a little bit more. But other than that, leaving it alone. Amazon has a lot of value here potentially. All right. So we've got a little bit of a top on Amazon in the short term, as you can see right there at 250, big psych level. So I want to turn that red for now, right? As Amazon is pulling back to this 234 previous high. Okay. So 234 is going to be your Amazon spot unless it stops here at this 238. Okay. So Amazon sitting at 244. It's in the middle of this zone. You do not want to try to guess, especially for my Amazon bulls. If you're trading it in the short term, trading it right here back up, because it could just be a pop real quick. Right. And then we come out with ADP numbers or whatever, and then fades right back down to that zone. Okay. So anytime there's a big gap fill, you all know, okay, I need it risk to reward, either back up here to fade it back lower through the gap, or let it drop because Amazon had a massive earnings beat. It's going to be strong. Everyone's waiting for this pullback so they can rotate it and take it past 250 plus potentially. All right. So Amazon still got a lot more value potentially on the pullback. If we can catch it on the short, great for an entry. But if not, just let it fall back and see what it does at 238 to 240. All right. Microsoft. This is the one that Trent was asking about, and there could be a lot of value here. Microsoft had good earnings. The only concern is this big double top and seeing where a bottom is. Okay. So Microsoft, what I would say for it right now is draw this trend line here on Microsoft and then look at the daily moving averages. Okay, so we got a daily 100 sitting right around 508. We also have a daily 50 sitting around 515. Okay. It already broke below the daily 20. If you can see there, everyone's bullish on Microsoft. Try to catch it off the daily 20. Nope. Fade. Right. Does it pop again? Nope. Fade down here to the 508s. Right. So be careful on Microsoft just because of this selling pressure and it is in a downward trend, and letting it settle in before you try to bottom ticket here to take it back up, because it could be a little pop, fade lower, pop, fade lower down into your 500, 508 zone. All right. So I do like Microsoft to rotate back up. However, you just need to find where a true bottom is and align it with the S&P and QQQ. All right, Meta. This is one that a lot of folks are eyeing right now for the upside. Okay, and I apologize. I got to get my big light back up in here in the new spot. All right. I apologize for the lighting. All right. So let's jump into Meta. Meta here. I believe on the pullback, if Meta can fill this gap potentially or come down into the 620s, that would be interesting. And if you're like, Brian, Meta, $600, is there anything else? METU. Okay. This is the leveraged ETF version of Meta. As you can see, it's only $32. When Meta was at all-time highs, the METU was $50. So if you're not too familiar with leveraged ETFs or 2x ETFs, they're a great way to invest in solid companies and not have to essentially, you can get a full share. If you don't want to spend $600 on Meta and you're like, man, I really don't want fractional or partial shares, you want full shares, and you could get, potentially 50, 100 shares of whatever it is, then there you go. Okay, so METU is a way that you can invest in Meta, as everyone's like, man, Meta's on a dip, Meta's on a dip. And then you're looking at it like, how am I supposed, what can I really get for that? Okay, so Meta has the opportunity to rotate and take out 800 again. So that would take METU roughly past 50. So what would that be? Roughly a double up, right? So you take it from roughly $30 back to 60 plus. Okay. And this is a long term. This isn't options. This is shares. Okay. This is shares for Meta. So Meta is in more of a share opportunity. Now you could trade options if you want to, right, on Meta or METU, but typically leveraged stocks, it's a little bit better to, just buy shares. Okay. So if you want to do an option on it, by all means, do your thing. But it's better just do shares, in my opinion. All right. Let's go into my Tesla, folks. So Tesla, everyone looking at this bull flag, Tesla has the opportunity to go to 490, 500, at least back to highs. This is forming roughly a bull flag breakout here. It's still ugly to me personally, but there you go. Break out of this flag, retest. It's on the daily 20, sitting right above the daily 20 at 440. You got right until 470. So you got about $10 until you get to a top end resistance, try to take it out and go to 490. So do with that what you please on Tesla. Just be careful, but it is forming a bullish flag that can head up to the previous highs, and the value's there if you do trade Tesla on a regular. Okay. Coinbase, crypto, not really interested in this chart personally. You got a pop and a fade on earnings, kind of flat on earnings, in my opinion. I think it had pretty good earnings, but popped, fade, and just kind of flat. So not really interested there. I've been really interested in NVIDIA. I'll probably hit it again. If I get a break below, because there's really no interruptions on NVIDIA, right? We have Qualcomm earnings, ARM earnings, Navitas, a couple of semiconductor stocks. There's really no interruptions on NVIDIA. So there's no interruptions. I can still trade it before its earnings. Has really good value on its contracts. If it breaks below this low here and we get below that 201, this is thin structure. Straight down, straight up move. You can have a straight down move. So for those of you that I've been telling, hey, NVIDIA 195 is your support, right? That is the bigger zone for buys or rotations back up. Right here is a little risky. So for anyone that bought NVIDIA calls on Friday, it's like, man, this is a bottom. It's holding 200 and try to pop it back up. They didn't get any continuation, right? NVIDIA needs to pull back, okay? So sometimes, these big stocks, people just get oblivious because they're so bullish. buy it long term, that's fine. But if you're trading it, not every day is a NVIDIA call option day. Okay, so if you want calls, 190 and 195 would be your spot. Okay, well, Brian, it's holding 200, it's going higher. Your risk to reward, do your thing. Your risk to reward would be a lot better suited like this, right? That's just my opinion. Like that, getting it down here, rotating it back up, then getting it right here. And that's how you look. Okay. So do what you please there on NVIDIA. If you're a NVIDIA trader, where's the daily 20? All the way back down here. So the further it gets away from these daily moving averages, right, the less I'm interested in going long on it for me personally for day trading. So if it's all the way down here at 188, it can meet us right there at 190 and 195. Okay. So there's NVIDIA. AMD, it's got earnings, leaving it alone until earnings reports. SMCI, leaving it alone until earnings reports. My Palantir folks, like I said at the beginning of the video, Palantir has a 17% expected move. That means expecting to move 17% up or 17% down. Okay, so if I do this data range, go here, right? Roughly around 220, 230. Palantir typically jumps around $20 for earnings if it has good indifferent earnings. So you can expect roughly about a $20 to $30 move post earnings on Palantir if it goes up to the highs. Great. There's going to be a huge gap. I can trade it back down. So it doesn't matter if I'm in it before it or not. We're in shares. And then there you go. For the downside would take us back down to this gap fill down here, back down to roughly 180 or 175. If it drops there, cool. Everybody's going to be like, oh, Palantir's on a dip. It's on a dip, right? 170 could be support. You could rotate it right back up, okay, for an extremely bullish November. So as everyone is raving for stocks to really take off on earnings, if you can get that just drop on earnings, right, that would, for whatever reason, that would be really nice going into a bullish November. Okay. So, ARM earnings, not do anything there. Oracle, it's got a little bit more gap to fill, but it's, at this 256 support. So Oracle still may want more downside. Its earnings wasn't that great. It was just sentiment there that popped it up. So there we go. Hood, I'll mention it really quick. It has earnings. A lot of people are questioning on these big stocks. Can it break out like crazy, right? Hood is forming, as I call it, a cup, not as I call it, but as the market calls it, a cup and a handle formation. Okay, so we know Hood's been coming out with some crazy, crazy stuff. It's involved in the crypto sector. Pullback, bull flag, retest, right? It's sitting above the daily 20. This looks like a takeoff, right? I have seen both scenarios where it goes like this, right, and just takes off, and there you go. And I haven't seen scenarios where it double tops and it comes back like that. I've seen both, right? So again, be careful trading before earnings. If you got shares, do your thing, hold through. All right. Uber, another main watch here. And, I think Uber could just be if it has positive earnings, I mean, it's above 100. Gets above 100, Uber can just start squeezing and squeezing and squeezing. Again, I would love to, I'm always a little bit antsy about stocks that are running up into earnings, but if it can pull back a little bit, then that would look even better for a dip buy pickup. All right. There we go. There's a quick run through, and we're right on time. We're right at about an hour. So I will go into these rare earth metals that everyone's interested in. All right, rare earth stocks. A couple of them that I like the setup on for shares, okay, is USA Rare Earth, okay? This is one that everyone was raving about and went crazy, and if you chased, you absolutely got smacked, okay, which is why I always tell people don't chase. If you know, you know. If I got experienced folks on here, you know, all right? But it's very interesting at this $18, $19, $20 level, right? And also I did a Fibonacci retracement on it, and it's also at a golden pocket area, right? So that essentially means that when does big money like to buy on a daily chart? They like to buy typically around this golden pocket area, which is between this 23.6 and 38.2. It'll be right in here. Okay. So that should look like some type of rotation back up, because if you know, I don't think I mentioned at the beginning, Besant talked about the rare earths, and I think I posted about it here. Besant rare earths. Okay. He mentioned on CNN, the grumpy old man at the Wall Street editorial board thinks rare earth occasion. Trump touts great success in China trade deal. Scott Besant said, "You're not bullish enough. China has been putting their rare earth plan together for 25 years. The U.S. has been asleep, but now this administration is going to move at a warp speed over the next 1 to 2 years to get out from underneath this sword." So this is what I was saying earlier, is that are these companies anything that many people have heard of? If you have, great. But it's been a new occurrence that people are like, man, energy and rare earth metals and these trade deals with China, it could be a potential 6 month, 1 year type of situation, right? Is this popped here from September, which is not normal. In 1 month, we were up from $16, or if you come all the way back down here, to 43. So this could have a 50% retracement back up to, the mid 30s. And if this goes through and everything's good, then yeah, we could take this out and go higher. Right. So USA rare earth, consider that potentially as an opportunity for share buying. Again, be careful with options, but again, look at the company, do your due diligence, not financial advice. But this sector here could be interesting for a short-term potential play until it builds up, in my opinion, a little bit more. So UUUU or quad U's. If I go to a monthly chart here, it went crazy. And if I have anybody down below that is listening that is a little bit more kind of in tune with these rare earth metals and you want to comment, great. I'm not claiming to be an expert. I'm just looking at a chart and considering the sector could have a pop. All right. MP, I think, has a lot more room to the downside. I do not like that sell candle. They have earnings coming up. I would have it a little bit more back down into these 30s or retesting these lows, something like that. But not necessarily a risk to reward situation I personally like there, especially for kind of an uncertain sector. NB, okay, NB is one that I do like right here. Okay, Neocorp Development. This is $7. Okay, from a technical standpoint, it is retesting this previous high right here, retesting this previous high right here from its IPO pop. 750 got above. Couldn't get above, couldn't get above, couldn't get above, couldn't get above. And then it finally popped again above and it's retesting this area. So from 750, if it gets back above 8, okay, I do like that potentially to retest and start forming this little bull flag potentially. All right. So watch this NB Neocorp for shares. And all you're looking for, in my opinion, what I look for is a 50% to 100% play. Right. So this goes from 6 to 12. There's your 100% on your money. If it goes from 6 to, what is that? 12, 6, 3. All right. 6 to 9. There's your 50%. Right. So obviously keeping your stop losses, things like that. So you do your due diligence on those things. All right. So if you want to screenshot, I'm not going to go through all these right here, but if you want to screenshot, look at the watch list I made here. Can just scan through, see if any of them are on a decent dip. This United States Antonomy. All right. Don't really like that candle personally. But it does have a gap. It could, potentially have a double up. But again, these are just based off of what he was saying, Scott Besant. All right. So a lot of these popped. They could retest 50% retracement once they get settled into a bottom. All right. So take a look, do your due diligence. There you go on the rare earth stocks. All right. Let's look at QBTS, quantum computing, QBTS. as well as the RGTI. All right. So quantum computing, we know, is not going anywhere. It's very aligned with AI and also aligned with our semiconductor chips. So I love this chart on QBTS. We call QBTS down here underneath $10 on this bull flag. It broke above this $12 level and has been just bull flagging and then continuing higher. So when you're finding entries here on these just breakout stocks, like, man, I wish I would have got it at 10 or 12, right? You try to find where you can get value out of it in the short term. Okay. So if I see this bull flag forming here and it's above the daily 20 sitting on top of it, you can get value from the $35 level back to 50, in my opinion. Okay. Obviously, we got potentially in quantum computing and whatnot, you could have QBTS like Ionic at 100 or 80 or whatever in uncharted territories. But in the short term, you've got this information. All right. You got this information and you can take it from 35 back to here. Right. But where you would really want it, in my opinion, or a better would be back at 20. Okay. Back at that area there for 20. So if it pops and then fades like that, that would be beautiful. Right. That'd be beautiful. So be careful loading the boat here. But yeah, there you go. Just from a technical perspective, it's got earnings coming up. Hopefully it drops on earnings actually. RGTI. Okay. RGTI, another bull flag there, right? Just kind of taking off. Got to find the monthly support levels at 30. There's that previous high right there at 34. So there is your roughly buy zone that you would like to be close to. Okay. The bigger buy zone will be back down here at 20. Ideally, where their daily moving averages, same thing right there at that 30. Right there at that 22.50. Okay. Another one, if you have not gotten involved or loaded up yet, Lyft. Lyft is about ready for liftoff, in my opinion. Okay. It's just been perched up here, breaking out of this wedge. It's $20. We've got roughly a $40 to $50 price target on this in the short term. And then it's got some gaps all the way back up, making an Uber move in the next 5 years. Okay. So if you missed Uber going from this level all the way up to $100, like Lyft is slowly behind, in my opinion. Okay. So there we go. 50 right there. There's that previous high right there. And anytime you have this kind of rotation back up, and also Lyft has begun gaining more free cash flow, and also it is now a profitable company. So when you have profitability plus you're gaining more free cash flow, you have more ability to kind of go through a recession or whatever it might be, right? Turmoil, you can pay your employees, you can fire people, whatever you need to do. Okay. So Lyft, I like it. Daily moving averages sitting above all of them, crossing, sitting above them, and, potentially ready for this bull flag takeoff. It's got earnings coming on the 5th. Okay. So if you can start getting a position in your shares, right? If it drops a little bit lower, right, on earnings for whatever reason, right, you have another opportunity to pick up more. Okay. This is a, leap territory. This is, share territory for a double up on Lyft. Okay. Okay. $20. All right. Another one. Let's see. Where's 2025 picks? I know I had it here. Okay, I'm looking at all these 2025 growth stocks. RGTI, Irene. Okay, my bad. Okay, here's the last one I'll mention because I can keep going on and on and on, is Navitas. Okay, semiconductor. Navitas Semiconductor is starting to build here. Obviously, it popped to 17. It's trying to retest all the way back to 22 and trying to get to that $25 and $30 level breakout. All right. So if you look at this, Navitas, it is broken out of a downward trend. Okay. This is why the technicals, in my opinion, are bar none. Is look at this break of this, or I should say reclaim of this IPO here. Okay. So most people are maybe a little bit, not familiar with the quantum computing sector, but you are familiar with the semiconductor sector and the chips and NVIDIA, so on and so forth. And I'm not saying just yet until it proves itself, but Navitas is sitting at a potential double up level. 12, 13, take it to 24. Okay. So, or 50%. So if you got $1,000 in and you get 50% on your money on this rotation back to the highs, you do your math. There's $500, right? Just doing shares. Okay. So, Navitas semiconductor sector. I like this support right here at $10, right? At $10. So right now it is showing support roughly around 12.50, right? And it's got earnings coming up tomorrow. So we want to see what this does here. Is sitting above the daily 20. Again, the daily moving averages are right there. So daily 20 shows short-term strength. Can this take off and do something like that? Or do we get a slight pullback back in this $9 or $10 level and it shows a hold? So just watch that. If you want to start grabbing up some shares, you can. If you already got shares, awesome. But Navitas, yeah, that would be my last one to mention in the short term. Okay. There's many more, but I can go through Cypher mining, all these. Okay. So let me check chat. Make sure everybody's good. Yeah. I like leaps. Yeah. Yeah. Leaps on Navitas. Yep. Cool. Is that good for everybody? Fives in the chat. 5 in the chat. Is that good for everybody? 5s in the chat. Everybody good? Is the futures market open? Yeah, it is. Dang, gap down on this daggone gold. Yeah, I'll stay on for another maybe, let's just say 30 minutes. I'll live trade for you guys. Then we'll get up out of here. Maybe 15. Gotta eat some dinner. Relax. Get ready for the week. But that was a beautiful, beautiful, beautiful pop down. And yeah. So y'all are welcome for missing that trade on gold back up. All right. Let me check the chat. What are the questions? Lift. Yep. I like lift leaps. Lift leaps. All right. Lift leaps. Yeah, I gotta get my big light back up in here. I do not like this look. I'm just being lit by the screen at this point. Just being lit by the screen. TMC. Yep, there's another one. Another one that goes in the rare earth metals. Let's see, daily. Yeah. Taking it from a little bit of support here at the daily 20. Excuse me, daily moving averages there. I like it at $7, maybe $6.50, and taking it back to trying, as long as it holds here, I'd like it for it to reclaim that daily 20 a little bit more. That's when the takeoff will really happen, which is around 8:30. But from here to here, a little uncertain, but you're looking for something like that, Trent. Looking for something like that. And then obviously most people are looking for something like that. So if Basent comes in and announces some positive things, we could have another leg up. Where's the previous high? Yeah. You can see there, it just rotate back to 15. So this could be another double up. So if you're already in this trend, awesome. But yeah, this is another one that goes kind of in that rare earth metals. Kind of there it is right there. So you see it's rejecting those like IPO kind of lows right there. So that would be kind of the pivot point that you'd want it to get back above to take off. Would be, or a target back up to the highs. As you can see, it rejected right at it. So yeah, These rare earths is very, it very much reminds me of like 2020 energy stocks with Biden. You know, every energy stock, fuel cell, things like that, F cell, right? If y'all remember fuel cell back in 2020, right here with Biden, went to 800, was absolutely stupid. Like, could this do this again? Some type of craziness? Yeah, definitely could. Some of these energy stocks could go absolutely stupid. I mean, fuel cell actually looks pretty good from a short term perspective. So I guess finding a little bit of a bottom, a little bit of a squeeze type of situation, back up to a double up. So yeah, a lot of these energy stocks could be a repeat of like 2020 situation. Yeah, I definitely keep an eye on them for sure. Cool. Star Wars light background. I know, right? Looks even crazier when there's no light. See, for a bullish November. Bullish November. Turn on the green a little bit. All right. Let's see. Put a 5 in the chat if everybody's good. If you want to see me kind of analyze the futures market just a little bit, I can put a 5 in the chat if you'd like to see that just for a little bit. And then don't forget, Finding Your Edge virtual event. Be less than a coffee. So if you got friends, family members, I know a lot of you have been like telling folks about what we've been doing here. I'm not sure a day just yet, but it will be in the next 2 weeks. So there'll be plenty of time for people to get involved. We'll probably do it roughly maybe next week. So after the next Stock Sermon Sunday, we'll be doing it that following week or so. So be less than a coffee a day. So what everyone can do, if you'd like, click the Instagram, if you're not following me on Instagram, and simply join the Dr. B community. Okay. The little community that's underneath my name, just join the Dr. B community. I'll be posting on there about it a little bit more. I'll be posting on my stories. So, and then we'll have an official event link. All right. So it'll be less than a coffee a day to learn futures and also to learn options, and just give a 2-day masterclass, 90 minutes of your time each. Right. 90-minute session, 90-minute session. So if you're about that, if you just want to come support, I'd appreciate it. If you want to tell folks about it, that's cool too. But I think just pumping out daily YouTube videos sometimes just doesn't get across to some folks. So I want to extend a little bit more educational piece. All right. Cool. All right. Fives. All right, let's go. Let's jump into the futures market just a little bit, see what's going on there. And wow, God dang it. Just absolutely missed this gold trade. All right, so a futures market, I tend to get in my teaching mode, so I'm not going to today because I want to have some dinner and get ready for the week. But what I'm noticing here is I always want to analyze the futures market opens up at 5 p.m. Eastern, 5 p.m. Central, 6 p.m. Eastern Standard Time on Sunday, and closes in the afternoon on Friday. So we can trade the futures market or at least see what's going on before options. So if I look at MNQ, what happened? We gapped up, right? So the futures market actually helps us a little bit. Do you see here? We gapped up because of that positive news with Trump. So that gives me an idea, if we don't fill this gap in the morning, that we could have a pop in the morning if we stay up here, go a little bit higher, and then we could fade a little bit again. So didn't I just say that a minute ago? Is we could have a pop and a fade, right? What did I say on QQQ? There's that lower high right there. This is MNQ. This is the futures version of QQQ, right? So we could have, so if you're looking in your Robinhood right now, you're like, Brian, yeah, QQQ is up. Yeah, I know, because the futures are up, right? So again, this is why that 2-day event or understanding futures and options can give you an edge, right, to understand how your week can go. So I already know that, man, in the morning, if I stay up here on QQQ and go right here, QQQ should be right into my zone of 532, right? So y'all tell me down below, where's QQQ after hours? Is it up here, right at 532 maybe sitting at 531, right? And what did we just talk about? Right? So if I see a failure back underneath that 530, then I know it's coming down. So that's the difference of understanding. And I'm more specifically speaking to beginners, how you can understand what's going to potentially happen or what type of trade you're looking for. And you don't just see green and you're like, man, calls immediately. I told you November, right? Yeah, we could pop, but it still could like fade just a little bit. And then we could see where we settle in. All right. So that's what I'm seeing here on MNQ. I personally don't like to trade the indices or MNQ or the NASDAQ personally during these times. I like to wait to New York session or when we're trading options to trade this stuff. I like to trade typically gold, MGC. Okay, that's what I was just on. So gold had a gap and absolutely missed it because of y'all. I'm just kidding. So if you see gold gap down, right? The market, futures market opened, it gapped down here. Let me take off this line. You see that gap right there? All right, right there. What did I say about gaps? Okay. So it doesn't matter if it's futures or options. Okay. So it gapped down to that area of support, held for the first hour pretty much, and then popped, and there's that hourly candle. So on futures is a little bit different for me because I kind of analyze it how I should analyze the options market more specifically, but I like to get an hourly view and look at the time on the hourly candle. Okay. So I know that we're coming back up in this resistance area on gold, because I'm actually looking to see gold go down a little bit more personally. Okay. Gold is kind of forming this bearish channel here, in my opinion, where it's forming these lower highs. Okay. So I want you to look at gold right here. Okay. And do you see this channel that gold is in? Okay. It has a downward pressure, bear flag, downward pressure, and potentially another kind of flag that's forming if it can't reclaim the highs. So what I'm looking at on this trade is potentially gold marking out these hourly levels. And where is gold pushing right back up into? Right? Even though it's above a psych level, because I know Dennis will be mentioning, well, Brian, like it's above, 4,000, right? That's a big psych level, right? Yeah, it is. But also I've got these lows right here that I want to be, again, the charts tell the story. Previous lows turned into resistance. So now that I've got an idea of a potential trade, it's in an hourly zone. What I like to do personally is I like to split up my chart, okay, and get a little bit more granular. So I'll split up my chart, and what I've been doing successfully with gold is having a 15-minute and having a 2-minute, okay, for me personally, okay? So I've already charted it. What I'll do also is I'll maybe draw my 15-minute channel here, right there, and it kind of aligns. So I kind of like this potential little scalp entry here on gold, right? And I've been watching to trade it in between my 9 EMAs, okay? So what I'll do is I'll mark my 9 EMA on the 15, and I'll look at the time left on that 15-minute candle. Okay, so if I start liking that 15-minute candle, then I'll start getting interested, but I do not want to enter ideally on, I may get a starter, but don't like entering on that 15-minute candle with 9 minutes left on it, right? So I want to enter closer to the close of this 15-minute candle and see if I can get a scalp back down, okay? So I like this zone of roughly around 40, 12, right? There's a previous low right there, right? And again, I've got to remember, for those that are, trading futures or interested, remember that hourly, right? That hourly is very, very strong, right? So I don't want to trade longs for me back up into this resistance area, but I've got to understand that that hourly candle is very strong. So drop down, you're going to retrace, and then that hourly candle may start to have a little profit taking. Because if I enter down here for buys, trying to take it up, right, I may be starting to trim my profits into this heavy resistance zone, roughly about 40.20. Okay. So 40.20 is kind of my interesting area. Okay. And my stop loss will be roughly back above this hourly high, which would be 40.25. Okay. And I personally like scalping. So, you know, I will get in and get out, maybe looking for 10 points, maybe even 5 points. So let's go back into our view here, starting to, you know, get a little interesting, starting to get a little bit overextended. I do use the RSI as well on my 15-minute and also on my 2-minute. So if you see the 2-minute RSI overbought, the 15-minute RSI, oh, excuse me, hourly, that was the hourly. 15 minutes, probably a little bit overbought. And kind of sitting in the middle right there. So still sitting in the middle. And these are volume profiles. So it tells me where the low volume areas are, where the high volume areas are to my right. If you can kind of see where the buyer stepped in right here. And then the low volume areas are where you typically get those flushes. Okay. So let's get a starter maybe here. And what I like to do is when I get my starter with one micro contract, I'll move my stop loss to here. And then if I see that that area is starting to get a little bit rejected, okay, I'll add a little bit to it underneath this 9 EMA on the 2-minute and take it down to this 39.90. Okay. And I'll monitor how this 15 minutes looking a little bit more. So you see, I've got my stop loss on the starter right above that 15-minute high. Okay. Now, again, this is my more so scalping strategy, right? Where if this 15-minute gets a little bit more solid here and it keeps taking out new lows, then I'll maybe add a little bit to it. If that 15-minute continues to kind of wick a little bit, then I can simply stop out and I'll enter closer to the 40.20. Okay. Okay. So again, RSI here on the 2-minute. So I know that I could maybe scalp that for roughly, my entry was at 40. And I'll drag that stop loss. So you see, I just added a little bit to it, drag the stop loss here, the top of this 15-minute close candle there. So let's drag it to here, see if. And then what I want to do is I want to get that low right there. See if I can take out that 40. That's that 15-minute low candle right there in a low volume area. If I can take out that low, I'll move my stop loss to break even. And I'll trim a little bit into the 4,000s. So entry was at 4,007. So we've got about almost 10 points. So 10 points would be right here. So about $250 on 3 micro contracts of MNQ. Let's give me MGC. If we can break that little level there, I like how the 15 minutes looking. See that 15-minute candle is looking a little bit more solid there. So again, my strategy here was analyzing the 1-hour time frame. I'm a little bit more fluid with my trading. I do like trading the downside personally. I think you get a little bit more value, so I like trading overbought reversals. So I knew that there was a big push up here from the hourly, missed the downside, but it's strong. So I got to watch that it could continue. But if I can get a little value on this 50% retracement here, right, this big move here, retrace 50% back into this area here, then I'm cool with that. Okay. Let's see if we can get a flush here, and then I'll get up out of here, and that will be the green trade. There we go. We broke below that yellow line there. I'll move my stop loss into break even right there. And then I do like to take off. I like to trim my positions. So, you know, if it breaks us out of here and it wicks us out, that's cool. No money loss. Actually, let me move this back. Give it a little bit more. I'm going to break my rules a little bit here. See, I don't like that 15-minute wick too much, but I know that we're coming into the close of that candle. So I've just learned that gold likes to wick you out. So I'm going to give that, you know, a little bit more room. Okay. So again, why I like the 15-minute and the 2-minute, because once you see that big green candle, you're like, oh man, no. But I'm looking at the 15-minute and it's still looking pretty solid for that final target right there at either 4,000 or 39.97. That'll be our 10-point move. And I like that wick. It looks a little bit better. As you can see, that was just a little pop, fade, reversal. Beautiful. Beautiful. Come on. Okay, we've got 1 more minute left on this 15-minute candle. I want a solid push on this last 15-minute candle, and then I want to trim. Okay, so trim into strength. This is for me. That's what I like to do. Okay, move it to break even now because that 15-minute candle, 1 more minute left on it. Actually, the low area is really down into this 39.92 area, but I see a high volume node on this 15-minute right there, which would be right here, right there. So you see it moves into that 4,000 zone. Okay, 58 more seconds on this 15-minute candle. Let's see if we can get it. If I start seeing wicking right here, I'll go ahead and trim. Yep. Starting to see a little bit of a hold there. So I trimmed majority position, moving my runner into break even. And there's a green trade for you really quick to end off the stream. All right, everybody. Let's see what it does really quick. These last 20 seconds. See what this 15-minute candle does. So again, I'll repeat my strategy here, which was analyzing the hourly to understand the overall bigger trend, to see where those bigger zones of resistance were or support, and then analyzing the 15-minute to see where potentially I could find an entry, right, on a nice 15-minute candle, and then get my confirmation entry on this failure of this 9 EMA on a 2, right? So that's kind of how you see me getting those really precise entries, at least for my strategy. And for my scalping strategy, how I can get a quick, 10 points entered at, 40, I think from the recording, it was 4,007. And 10 points right there would get me roughly around on 3 micros, right? What, 250 something dollars or so? I think it was. I already trimmed majority. So, starting to hold up here on this 15 minutes. So again, that 15 minutes is so important to continue. So you get confirmation to hold. Give me a 5 in the chat if you enjoyed that. All right. Enjoyed that kind of walkthrough to find a trade. And doesn't matter what you're trading. It could be futures. It could be, AMD, stocks, whatever. It doesn't matter what it is. And does this always go perfectly? No, not necessarily. Right. But just understanding the nature of the market, like I'm a price action reading trader. Right. So as you saw, like Brian, what was your theory of moving this back up? Like, well, I just wanted to give it a little bit more room. I was comfortable with this double top risk. I was comfortable in my analysis, and I did not want to get wicked out right there. And I was willing to risk it going all the way back up here and losing 80 to 90 bucks. Right. Right. So 70 to 80 bucks to make 200. So that's kind of the theory there on just the little scalp. Okay. I like that 15 minutes. See how that 15 minutes still looking solid. All right. So you'll see some traders, a lot of traders hold their full position. They'll just walk away and set their stop loss. From a mental standpoint, I've just learned that that's just not me. Right. That's just not me. I'd rather, enter in a little bit heavier size because I can get that really snipe precise entry, right, and get my money, get up out of there, than, walking away, seeing if it plays out, be up, be down, be up, be down, and trying to hit my big final target, than just scalping 10, maybe getting a 20-point drop, something like that in futures, more specifically. Okay. So I still like that 15-minute candle there, but I also don't like that it's holding up this 15-minute high here. So kind of see how this 2 minutes acting, and it might just spur up higher and get me out of my runner. But price action, for those that don't know what that is essentially how the candles are moving at your area. Right, how price is moving in your zone or the area of interest that you're interested in trading in. So just because, and this, I think this is a better real view example of, why when I do, these stock market Sundays, I tell people, like, you need to be in a community. There you go. Stopped out of my runner. All right. So there you go. Now, do I think this can continue? Yes. Do I think this is a bigger retest than I wanted? Probably. I probably could have kept my stop loss all the way up at the highs here, right, at my entry. So if you saw, there was very little, I don't think really any drawdown on my trade, right? So there you go. But I think still you have a continuation. So back down to this 39.90 and potentially back down to 39.80. So still forming lower highs on the 15 minute. Okay. Still forming lower highs on the 15 minutes. So I personally do not like buys on gold right now. I like this lower high. Look at that big pop, fade, pop, fade, pop, fade. We could have a fade all the way back down to 39.50. Okay. Back down to these lows. All right. So anyways, peace, love, and blessings to you all. Thank y'all so much for tapping in. Glad to get a little green trade there. It's cool to watch. We doing a Black Friday special. Yeah, I'll announce that. So Black Friday special. Tanvir, you've been waiting on that, haven't you? Well, you've been waiting on that, haven't you? Yeah. So Tanvir, go ahead and follow me on IG. I'm going to announce it inside of my that little group that I have if you're not inside the community. So just the Dr. B community, just make sure you join that right on IG. And I will post little things in there if that's cool with you. Cool. But yeah, I'm going to do a Black Friday special for Leverage University and coming up in there. But just want to get the month started off and go from there. Sounds good? All right. Cool. Thank y'all so much for tapping in. Cool. And I'll see y'all tomorrow in Leverage University for live trading. And I will see you all throughout the week for the videos. And we'll go from there. Talk to y'all later.